If you had to choose between getting paid every single month or building a much bigger amount of money in the future, which one would you pick? Most beginners don't realize that this exact decision can completely change their financial future over the next 510 years. Some people want fast results and regular income, while others are willing to wait and let their money grow quietly over time. The truth is, both strategies can work, but only if you understand how they actually function. This is where dividend stocks and index funds come in. They are two of the most popular investment strategies in the world, especially for beginners who want to start building wealth but don't know where to begin. At first glance, they might look similar: you invest money, wait, and expect profit. But in reality, they operate very differently, and choosing the wrong one for your goals can slow down your progress significantly. Dividend stocks are shares of companies that regularly share their profits with investors. When you own these stocks, the company pays you a portion of its earnings, usually every quarter, directly into your account. For many people, this feels like passive income because you're getting paid without selling anything. It's similar to owning a small piece of a business that sends you money just for being a shareholder. The biggest advantage is cash flow. You don't have to wait years to see results, you start receiving income relatively quickly. But here's the downside. Companies that pay high dividends often grow slower. They focus on paying investors instead of expanding aggressively. So while you're getting income, your total wealth might grow slower compared to other strategies. Index funds work differently. Instead of picking one company, you invest in hundreds of companies at once through a single fund. This gives you instant diversification and reduces risk significantly. Historically, index funds have delivered strong long-term returns. Instead of paying you cash, they grow your investment over time. Dividend stocks focus on income. Index funds focus on growth. If your goal is monthly income, dividends make sense.